But Mangalam, the other big one that came through was ITC. Looks strong, at least for the core businesses.
Yes, for the core businesses, ITC reported a very strong set. Now, there are two ways to look at ITC. On the one, you will compare it with what the street was anticipating. On an overall basis, you would see that the revenue is mildly below expectations, as is the EBITDA, and the net profit too has been aided by other income, which came in at close to 900 crores versus 500 crores itself. But here's where, the weakness ends, because the positivity is that the cigarette volumes, they grew around 6 to 7% versus street expectations of around 5 to 6%. The FMCG revenue, that grew about 8%. Yes, slightly below street expectations, but not too different from what the industry has been reporting so far as well. What's a positive is that their FMCG operational performance has seen a marked improvement. Margins have improved by 170 basis points, and the EBIT itself has jumped by 37 basis points. Hotels have done extremely well. The street was working with a number of 10 to 15% in their revenues. The company has reported 21% jump in their revenue. Agri-business saw a lesser decline than anticipated. The street was working with a decline of 10 to 15%. Despite that, the company has actually seen a decline of just around 2%, and that's largely because their value-added exports did a lot better. Paper business was the pain point. The revenues declined by about 10%, and at the same time, the EBIT declined by 50% as well. So a lot of the weakness in the numbers was caused by non-core businesses. The core businesses actually did better, and the worst part was in the core businesses, they were in line. So no real problems. ITC too has corrected about 10% from its highs, so see a bit of bounce back on that counter too.
Okay, Mangalam, thanks a lot for taking us through both of those very important earnings. We're going to watch for these stocks in today's trading session. Could be, some of the important moves to look at.